Hello, everyone. How is everyone doing? What's everybody enjoying the nice weather? Hello, George. Hello, Amit. Hello, people in the background and coming in late. So, good evening, Anissa. So, back and forth day. Back and forth day today. Give you some of my longer term thoughts if you want to stick around to hear them. Uh, Let's see. Industrial production numbers, while we're doing the live stream this morning, weren't that bad. Michigan consumer sentiment still edging up, but inflation expectations jumping from 3.6, and then they were expected to go to 3.4, but that came in, these are the short-term ones, 4.6, which caused a quick market reversal today. And that was about it. Quiet afternoon, wonderful bottoming pattern this afternoon. So that is all good. We had the banks have strong earnings this morning and they held up, but the overall breadth of the financial sector was not fantastic. Next week, what do we have on deck? We have the Empire State Manufacturing Index on Monday, and that's really about it. And that's minor. Tuesday, not much at all. Some housing starts numbers. You got some Fed Bowman speaking. Wednesday, of course, mortgage stuff, EIA numbers, but you got Fed Beige Book, very minor. So Wednesday's also a nothing burger. Thursday, initial jobless claims, Philly Fed Manufacturing Index, CB leading index, Consumer Board leading index, Fed Waller and Bowman speaking again. But again, very light week next week. And Friday, S&P Global Manufacturing Services and Composite, and then Fed Cook. So like next week's a vacation week. All right. But we have more earnings. As the overall market, you have the financial sector holding up well today. Microsoft pulled back, Apple somewhat neutral, Google and Meta rebounding nicely, Nvidia up, real estate bigger pullback, healthcare bigger pullback. Sort of a mixed day today. You see real estate, utilities, basic materials on the way down, financial and comm services leading the way up. Close to 80% for that rate hike if we look at the probabilities. And this is for the rate hike on May 3rd. You know, we're looking at, I don't know how, unless PCE comes in really dovish, even with those PPI numbers, been doing more thinking. With the market holding up like this, and next week, nothing unless earnings really, really suck. I don't know how. I don't know how they pause just yet and risk it. You got to risk it to get the biscuit. Greed still in solid greed mode. By the way, talking of earnings, remember we had like JP Morgan today, Citi. On Monday, we got Schwab, MT Bank before the open, and after we got some more banks, and then Tuesday we have Bank of America, we have non-bank Johnson & Johnson, we have Goldman Sachs, we have Lockheed Martin. After we got Netflix, United Airlines, we had Delta yesterday. What else do we have? Wednesday, U.S. Bancorp, Abbott, Ally, Morgan Stanley. We got Tesla after the close, which will be interesting to see how their earnings are with their price cuts. And we already know their delivery numbers. Alcoa, Discover. Thursday, TSMC, Taiwan Semiconductor. What else do we have? AT&T. After close, CSX. So earnings are picking up. P&G on Friday. SAP on Friday. So not like the most critical, but you have earnings picking up. Probably the two biggest that people are going to be looking are Netflix and Tesla. And then the week after really gets interesting. So next week is, from a news and earnings is, not a lot. Let's take a look at the bigger picture. Oh, by the way, before I do that, really nice. I'm telling you, if you're patient and you wait for the high quality setups, it can make your week. Like here, double bottom, whether you do conservative or aggressive, double bottom. This did not close below the stop level. and completing the pattern. That was it on the S&P. Watch for these patterns. They're so reliable. Again, no guarantees. NASDAQ running up, pulling back, 15-minute rotation zone, rotation up into the close. There was another one. So those are the things. Let's get back to the, just wanted to point those out. Let's get back to the S&P. So let's go through the bull and the bear case. Bear case. Daily cycles getting to the top area, weekly at the top area, so we can be setting up for a rollover. It does not have to happen on Monday, but we are setting up for a rollover. The key little area I'd be watching now, the major area is about 40.50 on a pullback. We start getting below there, it could turn into a much bigger pullback with cycles at the top on the daily and the weekly. Now, the bull case, we broke out, sideways correction in the rotation zone, and now we're technically above the most little recent breakout level we broke above today, came back testing it with the daily rotation zone and closing up. Well, we still have 20 minutes left, but it looks like we're going to close up against a high area from February. If we break out above about 4,200, next key major target area, we could do this before we really roll over, would be about 4,250, 4,255. And major is 4,300, which can almost flip it into potentially a more long-term buy mode. NASDAQ, and by the way, just keep an eye on, you got this little wide upward sloping channel is holding. Now, what's my first warning signs besides breaking below this 40-50 area? If we start closing in the rotation zone, and now you can see the rotations on the bottom of it and the trend line, we get a close after the first warning sign will be closing inside the rotation zone, which at this point would be a close below about 41.40, 41.38. The next major warning sign is a close below the trend line and the rotation zone. They're going to be tracking together. And then look, we're at 40-50 area. By the time that happens, the 50 will be out of the way. And look where that 62.5 is. Now, if we make early highs, this level's going to come up, but look right around that 200. But there's going to be warning signs before we start rolling over. NASDAQ. So, we're still holding with the bottom of the rotation zone, little bounce up today. If we break higher, I'm just going to the most recent area up. If we break higher, especially if Netflix comes in strong next week and it triggers something in tech, we're about 13.5 to 13.550 is the next key area. All right. 13.5. What's my warning sign? We close below 12.950. Then if we continue down below about 12.630, start to watch out. We could easily be back to the 200. Daily cycle still moving up on the NASDAQ, weekly at the top and trying to roll over. You see, though, we do have, it's coming into some support, so it has to do some major technical damage before we really get there. So, and I don't know, I mean, I get tweets like I'm a perma-bear. I'm not perma-bearish. I still have long-term things that say sell, but that does not mean you can't take advantage of these short to medium-term rallies. In this area, unless we really break out with a lot of strength, I'd be in trailing mode from earlier longs. The Dow's a little trickier because if we break early next week above 34,255, we have some fair amount of still resistance to about 34.6. We really need to get above 34.6 to really get a solid breakout. What would change things? Again, the first warning shot would be a close below about 33,750, and then the follow-through close below 33.4 would be not good for the Dow. The Russell, which again was the weakest today, And it did have, also I did not have this highlighted, but it did have a double bottom pattern. You see that playing out. Again, wait for the high probability patterns. Russell at the top. And Russell's the first thing I'm looking for any shorts. The weekly's still trying to get up there, but Russell's been weak, so the daily of it really starts rolling over. Even on a pop-up, the Russell is still not bullish at 1830. We need to get a daily close above 1830 for anything going on in the Russell. VIX, there's absolutely no fear. Look at this. I mean, look at the weekly. This is the lowest weekly close since, geez. This is the lowest weekly close since November of 21. This is where the time where for long-term hedging, this is the time to start looking at stuff for long-term. I'm not talking a short, I'm talking if you're got a little longer-term horizon, thinking we could, even if we have another short-term pop, we could roll over sometime even by the summer. Interesting. You could do some VIX hedging with that. The DAX still has a potential double top in place is what I'm focusing on for any bearish play. What I'm going to do right now, since we've virtually come up and hit those targets, I'm using these little most recent since we are getting to some exhaustion. The next minor level is 16,064 is the next minor level. Notes, closing below the rotation zone. And you see the yield climbing back up. So, this is something I'm going to be keeping an eye on next week. The 10-2s still in consolidation. The dollar index, pretty strong. Outside key reversal day. So, are we trying to put in a bottom against the prior support from before? Going to see how this follows through next week. Daily cycles getting to the bottom. Crude. Still, we came up to the 200 area, basing sideways. Is it poised for a breakout? I'm watching now. It's starting to drop out of overbought conditions barely, but even on a pullback to 81, 75 to 81 does not dampen this short-term bullish case. But if we don't pull back and reconnect with the rotation zone on the daily, I'm watching for a breakout above about 83.50 to take us quickly to 85, 85.25 potentially. And then possibly even more, which would potentially ramp up inflation again. Natty gas, nothing. Gold, finally getting more of a substantial pullback, but going into next week, I'm watching for a close below 1988. All right, I am watching for a bigger term pullback in gold. We are a weekly cycles top. We have divergences and a pullback at least to the weekly rotation zone. Same with silver. By the way, if you're a silver player, watching for a pullback in that too. Copper tried to get a move on today and then closing back down. So that was sucked a lot of people in and then closing back down. The yen was watching and it just barely still open for a couple minutes. It looks like it's going to trigger the double bottom. So we could continue to see some higher yen prices coming up here. Also, on a bigger perspective, you're sort of in a flagging pattern. All right. Euro, going to watch to see if we can break below about 109.50 next week. With that dollar index of pound, outside reversal day. We close below 123.44 next week, watching for the double top to trigger and a bigger pullback in the pound. Bitcoin, also going to be watching for a rollover play in Bitcoin. Tesla, earnings, remember, on Wednesday. And it's sort of getting my least favorite pattern. A little triangle-y thingy here. So we're going to have to see if this just keeps extending going into earnings on Wednesday. Any thoughts on the CAD? You mean Canadian dollar? Is that what you were, when you say CAD, is that what you were referring to? I'm watching for this key support to hold and a potential bottoming pattern in the Canadian dollar. It's nice here if this follows through on Monday and it gets a close back above 134. It could be a nice little pop into the rotation zone and possibly a little more against, and it could be done with, from my perspective, with a fairly tight stop. So that's what I'm keeping an eye on in the CAD. Why? Because if we go drop back below about 132.80, don't want to touch it. Don't want to touch it. I mean, there's a little support lower. So if you want to be a little more conservative, you get 132.50. You get below 132.50, you're into a clear path move lower, and you failed on a retest of the 200. And you failed from support of November of last year, of February, and again mid-February. So bottom, and we're trying to form a bottom now. So if this does not hold, you got an So that's the only thing I do like. It's a tighter stop area for a potential bounce play. Mike, understanding we learned to try probability setups. What is the market seeing as rates at 5% inflation is inflation and the VIX at 17? The market's got no fear. The market's got no fear in it. Do I know what the market's thinking? I have no idea what the market's thinking. Besides, it's got no fear. You know, and when there's no fear, that's the best time to put on hedges. I mean, can the market keep marching on? Sure. That's why it's more in trail mode. But where do we, hold on. See, if you look up here, multiple, I mean, we're sitting at, now we're going to have to see how this fares this, but we're not at cheap. Here's your PE ratio, 22. This is not cheap. You know, if you drew a line across here, it would be, hey, we're still holding above the breakout area. Now, we're not as bad as, you know, at the peak of the insanity, money flooding, COVID response, but this is not a cheap market. With rates being at 5%, 4.75 to 5%. This is not a cheap market. All right? 22 times. Why do I bring that up? Because, I mean, the Jim Bianco podcast will be out Monday, but and I've listened to it. Well, I listened to the whole interview. The podcast hasn't been fully edited yet, but I did listen to it. I mean, he shares some of the same thoughts I do. You know, look, if I can get close to 5% risk-free, hey, I can make up. You know, the average S&P return on a year-to-year basis is only slightly above 8%. I think he said 9. I think it's 8 something. But if I can get 5% pretty risk-free and make up with some other stuff with short-term swings or, you know, some short or some good dividend stuff like MO, hey, I'll take 5%. I don't want to gamble with this market being up here, especially since I have still long-term sells. So that's, and there's no fear. And when there's no fear, it's generally okay. I mean, I'm not saying it has to sell off. That's why I went over there. We could still break higher next week. We could still, maybe Q1 will pull through just enough with earnings and this thing will hold up. But would I be betting the farm and taking all my money now and putting it on at these multiples? No. So that's my thoughts. Also, I mean, it's shared with some other people. Any expectations on Tesla margins given the price cuts? I don't see it as bullish. And the Mercedes figures compared to the Model S and X, the figures that came out. Now, Tesla's got some real questionable accounting. So could they pull something out of their rear section again and people go, I don't know how they're doing that? Sure. But they've got to have it has to start hitting their margins with all these price cuts. There's no ifs, ands, or buts about it. And the fact that they're cutting again in Europe, that's not a good business model long term. But everybody will paint it the way they want to see it. I think Jim analyzes both sides of the market pretty well. You know, if you're not a raving bull all the time, people say you're pessimistic. There's a great time to be optimistic and there's a time to be cautious. I'd say he's more cautious now. I'm cautious now. Again, if we get a bad downdraft or if something happens, I mean, we could easily drop 20% from these levels. I don't want to have a 20% downside when I can lock in 5%. Again, we're not going to the moon just yet, even if we rally. We're 22 times already still, and those earnings have not reflected full earnings compression yet. There's more risk to the downside than reward to the upside. So if I can eliminate a chunk of that risk and still get, 5% is not a bad risk-free return. Considering I could see another downdraft to 20%. Let's even say we've rallied to 4,300. A 20% downdraft for that is close to 1,000-point shave off, which takes us back to 3,300. I'd take my 5%. Plus some dividend plays. So we'll see. Again, I don't have to worry about being right on the market. There's plenty of times to get in. If you look at the bigger picture still, I keep talking about this. We're still in a huge consolidation phase. At least, if we got above 4,300, we'd be at a breakout and above a key technical level. But do I mind, all right, we're at 41.71. Do I mind giving up 100 points to get a lot more confirmation? No. Nope. Not at all. I mean, there's lots of stuff you can do, Quasimodo. You can do, you know, short-term bills. You can do those. You can do CDs. You can do money market funds. Boy, I got a bunch of money I put in earlier into an 11-month CD that pays 5%, and that was a while ago. 11 months for 5%. Hey, I'll take it. I mean, it's very different. If we were trading at 1%, that's very different. It forces you into the markets, or at 0. 5% does not force you into the markets. You know? And what people miss is just like this. You know, we were running stuff here, but this got minorly bullish, then got much more bullish. I was not bullish here until they flooded the thing. But look, even if you wait till it breaks out and you take from 3,400, you know, and I was talking, I know people heard me on this channel telling, hey, we're going to watch for a big rollover play. But you know what? If you took 3,400 to 4,500, you took a big chunk out of this. I don't need to do this and sell here. And the chances of it's easier to buy closer to the lows, but it's harder to sell closer to the highs. So I don't need to put a ton of risk in here. If the market's going to be giving me warning, and in this environment, it's not going to go straight up. You're still going to have downdrafts. Even if let's say, pretend the lows were in. Pretend the lows were in. Let's say something shifts and the lows are in, or the probability of the lows increases dramatically. It's not going to be like 4,200, 5,000 in a week. It's not happening. You're going to get back and forth. There's going to be ways to get into the market. And the Fed hasn't even started a cut cycle yet. And that's when the markets get the most risky. As I've said before, when the 10-2s, where's my zero line? Right here. We're not even above it. Once we start getting above this zero line, generally you have major market troubles. Where's the 10-3 month? Oh, geez, look at that 10-3 month. Whew. By the way, no more potential double bottom. And when your 10-3s especially start getting back to zero, watch out. So that's where we sit. Possible Tesla going to cut prices at the cost of profits to break even and grow TAM, then eventually raise prices at the right time. That's, you know what? That's tough. One more pop on XOM. Remember, that was if I was forced to play one stock, that was the one thing I was watching this year, XOM. If oil breaks out again, XOM will. It's basing right against the rotation zone. But my key line, the sand in the short term, is 113. All right. So that's where we sit right now. I'm going to call it a day. I hope everyone has a wonderful weekend. And I will see you back on Monday. Thank you for tuning in and spending some time. Thanks for that information on it. Merrill Preferred Deposit is paying 4.55. Yep. There's another thing. There. If you're looking for something else, Merrill Preferred Deposit paying 4.55. 100% liquid. Also, for unused funds and like Interactive Brokers, they only pay 0.5% below prime on any unused trading money, which isn't bad. You can keep money in a trading account. Right now it's 4.3. You got that option too if you're in Interactive Brokers with accounts. I think it's above 100K. So there are some options out there. And that way you even keep your money. Hey, if I need to put something to work at a great opportunity, I can put some of that to work too. All right. You're welcome, Anissa. You're welcome, business person. Again, thank you everyone for tuning in, and I'll talk to you all next week. Bye for now.